Good morning, our dear participants. We have a pleasure to start our session, and my name is Beata Biela, and I am Advocacy Manager at Microfinance Center. And today I will moderate the session on Poland's successful cases in using ESF Plus instruments through the cooperation with financial intermediaries. We would like together to delve into specific areas, for example, specific ESF Plus instruments deployed by Poland to support microfinance and social enterprises, but also selection requirements and distribution models for cooperation with microfinance institutions, and also best practices into leveraging ESF support, overcoming challenges, and maximizing social and economic benefit. And I have the pleasure to have with me Barbara Woszczyk-Kępińska, the head of the Financial Management Unit in the ESF Department of the Ministry of Development Funds and Regional Policy. And Barbara's professional experience is related to public administration, where for over 20 years she has been involved in the implementation and management of the European Social Fund. For more than 5 years, Barbara has been working in the ESF department of the Ministry of Development Funds and Regional Policy, where she has been in charge of the unit responsible, among other things, for the creation and implementation of financial instruments financed by the ESF Plus and other funds, as well as the creation of simplified cost options, including those for projects implemented by social economy entities. And with us is also Aleksandra Kwiatkowska, the Office Director in the Department of European Programs and Bank Gospodarstwa Krajowego, Polish Development Bank. Aleksandra has been involved in the implementation of programs co-financed by the European Social Fund since the first Polish EU perspective. She was working in the ministry responsible for managing EU funds, currently the Ministry of Funds and Regional Policy. Aleksandra has been working at BGK since 2019, where she is responsible, among other fields, for ESF financial instruments, preferential loans for development of social economy entities, setting up a business, adult education, entrepreneurs want to increase the accessibility of their businesses. And I would like to ask maybe the first questions to our participants. If you could launch the first poll so that we could get our audience a bit more. Let's wait for a minute. Okay, so the question is, are the managing authorities in your country already engaged in developing financial instruments dedicated to microfinance institutions and social economy? So please, our participants, to vote. Maybe let's give some time for more answers. It's interesting that actually the majority, 2/3, had experience to some extent, or there is kind of change, but still the majority has to some extent such engagement visible in their countries. 1/3 to a considerable extent, and just 11% no involvement or minimal involvement. Thank you very much for voting. And now maybe let's see how it is in Poland. And the questions to our speakers: what is the role of the Ministry of Development Funds and Regional Policy and BGK in financing microfinance and social economy in ESF programs? I would also appreciate if you could outline how Ministry and BGK share their roles between themselves. So now, Barbara and Aleksandra, the floor is yours.
Thank you, Beata. Good morning, everyone. It's a pleasure to participate in this meeting and talking about financial instruments in Poland. I will start, and Aleksandra, could you? Yeah, thank you. Poland is one of the very few countries in the European Union that has been using ESF and ESF Plus for deploying financial instruments in social policy area. The total allocation for this financial period is over 260 million euro, which is several times higher than in previous periods. In this exercise, from the beginning, the Ministry of Development Funds and Regional Policy, as a coordinating body for ESF and ESF Plus, and also managing authority, closely cooperates with National Development Bank, BGK. Which plays a role of holding fund for all of our financial instruments. It is the ministry which decides in which social policy area to deploy the financial instruments financed by ESF Plus, after conducting the ex-ante assessment, of course, which is required by structural funds legislation. It is also the ministry which decides what to do with resources paid back. In those decisions, we cooperate, of course, with different stakeholders, like social partners, also financial institutions, who are also a member of our monitoring committee. However, our main objective is to support the vulnerable target groups defined as the final recipients of ESF interventions. And Alexandra, I will give you the floor because it's all about ministry.
Good morning, everyone. So first of all, I would like to thank you very much for the invitation and for the possibility of sharing with you BGK experience in implementing financial instruments. So Barbara presented the general framework of financial instruments implementation under European Social Fund. And I would like to focus more on the role of BGK as a development bank, but also as a holding fund. So BGK is the Polish development bank with the mission to support sustainable social and economic development for Poland. We support the implementation of many strategic investments for Poland. And in general, our role is to supplement the banking system by filling the market gap in key areas of the economy. As far as financial instruments are concerned, since 2007, we are acting as a fund of funds manager. And in current financing perspective, 2021-2027, we've been appointed by the ministry with the role of intermediate body and fund of funds manager. And as the holding fund, we implement financial instruments with close cooperation with the ministry. With the Ministry of Development and Funds and Regional Policy on one hand, and Barbara has presented in details the scope of cooperation. But on the other hand, we are responsible for selecting financial intermediaries in a public tender procedure, and how it's working. Once financial intermediaries are selected, we transfer the funds to them for the purpose of granting loans to final recipients. And our main role is then to monitor the activities of financial intermediaries and ensuring that loans are spent in accordance with the main goals. And why we support social economy? First of all, we would like to establish a sustainable system of financing based on repayable resources. Of course, we also would like to provide social economy entities access to capital, which is necessary to develop their activities. And of course, we would like to increase their financial autonomy simply, and make them independent from a granting system, which is very important to us. And of course, which is, I think, maybe most interesting for you today, we would like to involve commercial institutions in social economy and its financing system. So to sum up this slide, as you can see, we have different stakeholders in our process of financial instrument implementation. So we have ministry, BGK in a double role, as I mentioned before. We have financial intermediaries selected in public tender procedure, and of course we have our final recipients.
So thank you very much for the overview of the roles. Just maybe before going further, I would like to remind our participants that it's always possible to ask the question on the chat, or it's also possible to raise hands if somebody would like to ask a question personally to our participants. I invite our participants because it's a very good occasion to do this. Anyway, coming back to the session, we saw the roles, we saw the responsibilities, we saw that BGK is responsible for selecting financial intermediaries. But if you could expand a bit on the way in which you select the financial intermediaries and what are the eligibility criteria for such intermediaries to fulfill?
Okay, so maybe I take this question because as I mentioned, BGK is responsible for selecting this financial intermediaries, and we are carrying out the selection of them using an open public procurement procedure, which is based on different criteria, such as price for the management and administrative fees. And of course, the prices vary depending on the product. And I can give you the example. The minimum fee was at the level of 2% of the OP contribution to the financial instrument allocation, and that was the case for accessibility loans. And the maximum fee was at the level of 20%. And this was the case of social economy entities. So as you can see, the range between these offers is very large and depends on the specificity of the product. Apart from the price criteria, we have also criteria connected with the quality of the offer, such as the experience in deploying financial instruments, or availability of customer service points, which means that financial intermediary receives points for having at least one customer service point in given voivodeship. We also have social criterion, which is I think the unique one, and means referral of a person with a disability for the order. Also, we have a criterion such as length of the portfolio construction period. So the shorter the loan issuance period is, the more points are received. And we have some specific criteria for social economy, such as employment of individuals with experience in working with social economy entities. Or another specific criterion for social economy, contribution of financial intermediaries' own resources to the financial instrument. So I think that was clear. Maybe one sentence to sum up. The very important issue is that we choose financial intermediaries in an open public procurement procedure, using two different types of criteria, price for granting the loans on one hand, and so-called quality criteria on the other hand.
Thank you very much. So I understand that actually those system assumes collaboration. So maybe now let's go to the next question, but this time to our participants, if we could run the second poll, where we have the question, do you have contact with the managing authorities regarding collaboration on financing for the microfinance social economy sector in your country? How it looks like? If our participants could vote how it is before we go to our panelists for further discussion. Well, again, the middle option is the most voted one. So it looks that collaboration is limited in 63% of our respondents. The second place is ongoing communication and collaboration with 22%. And for the moment, no, we do not have contacts with the managing authorities, 11%, just similar to the first poll, the last option. So let's now come back to our speakers, and if you could just share how it is in Poland, how the cooperation with microfinance institutions and banks looks like in Poland, how model develop over time, you know, from limited number of distributors to more numerous ones, but how, and well, what is the target model, if there is such, if no, why there is no such model? And of course, what are the ESF financial instruments which are channeled through the financial intermediaries?
There are four main areas in which ESF plus financial instruments have been deployed. First one is social development sector. It's for development of social enterprises and social economy entities. The second one is lifelong learning. It's for people who want to upgrade their qualifications. Third, it's self-employment for people who want to start their own businesses. And the fourth is accessibility for people with disabilities. And it's an instrument for enterprises to adopt their buildings or services to the needs of people with different kind of disabilities or special needs. All projects implementing those financial instruments are quite new, as they have been deployed within this financial perspective, and they will all of them will last until the end of the financial perspective, so until 2021. And next slide, please. I will start with the area of social economy, which is actually the one which we support from 2012. Our main goal is to boost the development of social economy entities and social enterprises. Since 2022, we have legal framework in Poland, the act that defines a social economy entity and social enterprises. And those are usually social cooperatives, associations, foundations, non-profit organizations, or others, such as, for example, church institutions. Such entities operate to meet social goals and offer social services. From ESF Plus, we allocated 40.5 billion euro to let social economy finance their development and to finance more than 800 investments. There are two different types of loans. First is for startups, and another is for major entities. They differ the amount and repayment period, but both have a possibility to combine with grants. Social economy entities can write off 25% of loan in case they meet social criteria which are defined by ministry. It's either the creation of a workplace for disabled person or the implementation of social services in local communities, or finally implementation of services in the area of green economy. So far, only 16 loan agreements has been signed, as there were some problems with selection of financial intermediaries. Next slide, please.
So after Barbara presented the detailed information concerning social economy entities loans, I'm going to give you the general overview of loans distribution model. So in order to understand our general model of loan distribution, I will show this with an example. So Poland is administratively divided into 16 regions. And in general, financial intermediaries distribute funds within the framework of the national part, which covers all of Poland. And we usually choose one financial intermediary who provides loans throughout the entire country. Then we have macro regions or macro region part, which covers from 4 to 6 regions. And for example, on these three different colors correspond to macro regions. And regional part, finally we have regional part, which covers 2 regions. And always the rule is that one financial intermediary cannot acting in the same macro region and region. And of course, national part financial intermediary cannot acting in the other part. And we always want 2 intermediaries to operate in a given area, so that that client or final recipient can choose whom they want to cooperate with. Also, we think that the situation where two different financial intermediaries, financial institutions compete with each other ensures the high quality of their service. So that's our concept for this distribution model. And maybe also one word about the allocation within public tender procedure. So usually the amount of money allocated in a given tender is 1/3 of all the funds, with the possibility of an option in the amount of 300% of the base order, which means that in some cases there will be no need to initiate another tender procedure. So I think what's important to underline is that our model of loan distribution is depending on the product, and is determined on a case-by-case basis, and mostly is the result of our previous experience. Later, I will show this on the examples, so you will see how this different model of distributions are related to specific product. So the first example, financial instrument for social economy development. So we have a quite great experience in deploying loans for social economy development. We supported social economy sector since 2012. And at the beginning, the economy sector the projects were co-financed by ESF funds and state budget, and since 2016, loan funds have been supplemented with financial intermediaries, private funds, and in total, we will make available for social economy entities more than 100 million euro under all of our financial instruments for social economy development. And what is also important, that we use very actively the reflows, the legacy fund generated from 2007, 2013, and 2014, 2020 legacy funds. And as you can see on the slide, at the beginning, I mean, in the perspective 2007, 2013, we are cooperating only with one financial intermediary, choose for 5 different macro regions. But for some years, a number of financial intermediaries has been systematically rising up, and in 2014, 2020, there were 7 of them operating within 8 different parts. And currently, in the perspective 2021, 2027, we've been selected 4 different financial intermediaries, 1 of national scope and 3 of macro region impact. And thanks to our financing, thanks to our support, almost 2,200 new jobs will be created, and over 2,600 loans will be disbursed.
Yes, so let's move to the second area into which we have deployed financial instrument from ESF. That's self-employment. Our goal is to activate people seeking employment in a way that they will start up their own businesses with the help of the loan. Moreover, we would like to promote self-employment as a possible way to improve one's situation on the labor market. While implementing the financial instrument, we act on the basis of Polish national legislation, and that lets us combine the ESF Plus with the National Labour Fund. It's an act on employment's promotion and labor market institution that defines all the details as regards the operation of the loan funds and the condition of the target groups, loan parameters, and so on. From ESF Plus, we allocated more than 150 billion euro to finance starting up small businesses that will operate for at least 12 months. Our target is more than 6,500 such businesses. The loan that we offer is up to around 40,000 euro. The interest rate, as you can see, is low. It's about 1.45% per year. There is also a possible combination with grants, but only for those people who, according to the national law, would be eligible to get a grant but decided to take a loan. Such grant would be eligible for, according to the Poland legislation, who are far from the labor market. So far, more than 800 loan agreements has been signed.
So as far as self-employment loans is concerned, we also have a big experience in this area. Thanks to our activity, nearly 7,000 entrepreneurs received our loans. And until 2020, this product has been financed uniquely by national budget. Whereas in 2021, 2027, as Barbara said, it's also financed by ESF fund, and we plan to grant loans to nearly 7,000 people. So once more, on the slide, you can see the distribution model for self-employment loans. In this product, we decide to disburse the loans within national part, macro regions, and regions. And as you can see, compared to previous years, in 2021, 2027, we introduced the national part. Why we decided to do this? Simply because we have a lot of money to spend in this financing perspective. and our time is limited. And what is also important, that we know that there are financial intermediaries, that there are financial institutions that have the capacity to be a national wide operator. It's very important to have this kind of financial intermediaries who can afford, you know, the national part.
Yeah, and the third one, this area, in this area, we have deployed financial instruments in education area. As in Poland, we have very low level of lifelong learning among adults. The goal which we want to achieve with financial instrument is to bridge the gap in this area. Implementation of such financial instruments is not restricted by any legislation. So we act only on the basis of Common Provision Regulation, of ESF regulation, or ESF Plus regulation, and of course, investment strategy. From ESF Plus, we allocated more than 50 billion euro to let people acquire their qualification in any possible field of interest. Our target is more than 15,000 persons adults in lifelong learning. The loan that we offer is quite small. It's up to 12,500 euro, but there might be several loans for one person up to this amount. Therefore, also the repayment period is short because it's maximum 3 years. The interest rate are zero, as we need to incentivize as many people as possible. There's also possible combination of grants up to 35%, which can be partial totally deducted from the loan, 10% for completing the training, additional 10% if a training refers to digital, green, or silver economy or accessibility. And finally, 15% can be written off if a person is in difficult material situation. So far, 260 loan agreement has been signed. And next.
Okay, so this lifelong learning loans a new product for us. We don't have previous experience in deploying this kind of loans. However, we decided to distribute loans within 4 macro regions and 1 national part, and we chose 5 financial intermediaries, 5 financial partners to granting this loans.
And the last area in which we have deployed a financial instrument from ESF Plus and accessibility for people with disabilities. The goal of this instrument is to improve accessibility of entrepreneurs and their business activities, both the space in which they operate as well as services which they offer. While implementing this financial instrument, we act partially on the basis of Polish national legislation. The Act of Providing Accessibility from 2019. However, main assumptions are defined within the investment strategy. From ESF Plus, we allocated not much, only 16.8 million euro to finance 750 investments in accessibility of business activities, as we are not sure about the future success of this instrument. The loan that we offer has to be proceed with accessibility audit, which should describe the scope of the investment, which is needed in a company in order to be more accessible to the needs of people with disabilities or special needs. The amount is up to 250,000 euro, which is quite a lot. It's actually one of the higher loan that we offer. Interest rate is low, 0.15% per year. This is also there is also possible combination of grants up to 30% if the investment meets the criteria. So 15% can be written off if an investment is successfully completed. Another 15% is possible if an enterprise received so-called accessibility certificate, which can be obtained by the company according to the Polish law. And so far, no loan agreement has been signed.
Okay, so in the case of financial instrument for accessibility for entrepreneurs, as in the case of lifelong learning loans, this is a new product for us. And as you can see, this product is implemented within two national parks. We've chosen two financial intermediaries operating nationwide. And as Barbara said, they have just started, so they haven't granted any loans yet. So I think that we gave the general overview of our products and of our types of distribution model.
Thank you very much for this overview and developments over time. I understand that with such history, there must be successes, there must be failures. If you could share with us your experience, just with the successes, with failures, what are they? What the lessons learned happen to be, and how you just make best of it?
General conclusions or helicopter view of our experience, of our goals. So I think that the one of our main goal is to establish a sustainable system of financing social economy entities, but not only, because as you could see, we have different products, and this system should be based on repayable resources. This is very, very important for us. And we also would like to increase autonomy of different enterprises and make them independent from a granting system. And of course, we need to involve commercial institutions in financing system. However, banking sector is not interested in participation in the implementation of our instruments, of our product. Maybe this is because our product, as you can see, are very specific ones, and it can be difficult for commercial banks to deploy products which are not of the shelf. But on the other hand, we succeeded to involve different financial institutions apart from the banking sector. And our financial intermediaries are usually regional loan fund or regional development agencies. And of course, they have varying capacity, and we need to take this into account when designing the distribution model. As you could see, sometimes we have one national part financial intermediary. In the other product, we have two of them. So really, we have to adjust the model of distribution to the capacity of financial intermediaries. And what is also important for us is that we also try to ensure the competition among financial intermediaries. The situation where two different financial institutions compete with each other gives, in our opinion, better access for the final recipients and gives better access for final recipients to the loans and ensures the high quality of their service.
And if I could add something about variable instruments and their potential. Over the years of implementing financial instrument from ESF budget, we have noticed that there's enlarging potential in replacing grants with repayable assistance. And its potential is in more areas than the core ones, which for us is self-employment and social economy and supporting and developing social economy entities. That made us extend with financial instruments in this perspective, and we decided for another financial instruments in education and accessibility area. The best example would be, I think, lifelong learning area, which so far has been financed mainly in the form of grants. And as we're talking about sustainability, we think and expect that on the basis, of course, of our past experience, that partially returnable loan will lead to prudent decisions and a better result of ESF interventions, as they have to be paid back. It's not a grant, yeah. And before it will also give us better sustainability of ESF funding.
Okay, so maybe if I can add something, so I totally agree with Barbara that we should focus more on intensive use of legacy funds. I also think that there must be an organic growth of financial instrument support from one EU perspective to another. And of course, grants and loans should complement each other and not to compete, which unfortunately sometimes is a case. I also think that it should be a greater variety of financial instruments, for example, loans, guarantees, or combined instruments. And finally, I think that the system should be more flexible. And I can give you the case, the case of indicators. It's my favorite example. So as you for sure know, we should meet some indicators. And it happens that these indicators do not always align with the needs of the borrowers. For example, in the case of self-employment loans, the indicators we need to meet was based on a lower loan amount. And in practice, we don't want to grant a smaller loans because we have to meet the indicator. We want to grant a loan that aligns with the borrower's need, which is obvious. So fortunately, our managing authority is very comprehensive and open to debate, and we are discussing how to resolve this issue. But otherwise, we could have a problem with this.
Thank you very much for for sharing challenges also from your perspective. And when, as you said, there are indicators to be met versus smaller loans. But how it translates to smaller microfinance institutions? Working in advocacy, we can hear quite often that smaller microfinance institutions are put sometimes at disadvantage because of the size. So how it is, are bigger MFIs favored at the selection of BGK intermediaries at the expense of smaller ones? And what can smaller MFIs do to be attractive as intermediaries?
I would say that's the question to BGK, which is the main actor in selecting financial intermediaries. However, from the point of view of the ministry, we participate in the process of selection criteria development, and during this process we pay attention so that the criteria are adequate to the size of the tender. Therefore, I wouldn't say that the bigger microfinance institutions are favored anyhow, but perhaps Alexandra will be able to explain it in details.
Yeah, it's a question to BGK, of course. As I mentioned before, to compete in a public tender procedure, MFIs, financial intermediaries, should fulfill different conditions and criteria, such as economic stability or finance potential, previous experience in granting loans, or having an appropriate human resource capital. And having into account that the capacity of different MFIs varies, we decided to introduce model of distribution considering this capacity. And it is, of course, we are aware that it is, of course, more difficult to meet the criteria for the national level than for the regional one. So a smaller MFIs with less experience can apply for the regional part of the contract. And there is another possibility, which is very often used in practice, to form a consortium. This allows smaller entities to apply for the contract, even for the national part, which is very often the case in our public tender procedures. So yes, there are possibility for smaller MFIs to be attractive as intermediaries.
Thank you for the answer, and I hope it will assist smaller microfinance institutions to be better prepared to meet the expectations of the Ministry and BGK, and especially BGK. And maybe before going to the next question, because now we have kind of 10 minutes left, and we have a question from Marcin. So let's try this one for our speakers. The problem is also with the law. The current tender for selecting a financial institution for startups is limited only to banks and financial institutions regulated by banking law. Loan funds with excellent experience in these fields are therefore excluded. Any solutions for this? Any kind of reflections?
So it depends on the conditions. When we are organizing a public tender procedure, we allow both banks and financial institutions apply. That's true. That if bank is our intermediary, it's it's under this bank regulation, whereas financial intermediaries such as regional institutions, these regional agencies, they don't obey to banking law. But we don't restrict in our public tender procedure both banks and another financial institutions can apply.
Thank you very much. I hope it just answered the question. Of course, if other questions, and I encourage other questions to be asked because we have now time for Q&A session. In the meantime, maybe let's try one more question from my side. What about EU-funded programs? Do they make entities and Europeans dependent on public funds? And how to ensure from one side that microfinance institutions and general social finance providers have long-term financial sustainability, but also from the other side, the financial instruments are affordable to end beneficiaries at the same time? How do you think would be the best solution for this?
Well, EU funds are an important source of funding in many business areas. However, if we talk here today about the ESF Plus interventions, actually have to be reminded that microfinance institutions would not offer ESF loan products if they were not financed by the EU funds. So, with ESF funds, we rather offer new products, we extend the offer of financial intermediaries, we extend their clients who may count for other forms of financing offered by them on a market basis. On the other hand, sometimes there are some voices heard that microfinance institutions are dependent on the funds, but that perhaps could be more visible in the area of supporting small and medium-sized enterprises. From, of course, European Regional Development Funds or Cohesion Fund. Those funds offer substantially bigger budgets to microfinance sector, and maybe for the maybe there therefore is the dependence which you speak about, and it's more visible. I think it's not the case at ESF Plus.
Thank you very much.
So
yes?
maybe I can add something.
Sure.
So it's very complicated issue, and that's true that we are observing that some of MFIs become dependent on the public funds, but there are also those who can operate without relying on the public money. And these are the ones who provide loans also from their own capital, or they are involved in the other activities, not only granting the loans or guarantees.
Thank you very much. We have still 5 minutes, so maybe as there is no question for the moment, so maybe let's try one question for our international participants. It's had also at advocacy level that a lot of countries prefer grants because they are easy to service, etc. And you also transferred from grants to more oriented instruments, repayable instruments. If you could maybe describe why you did this, what were the difficulties and how you overcome them, just to encourage other countries to just focus maybe more on financial instruments rather on grants.
In Poland's socio-economic entities are financed mainly with grants and not returnable sources. Perhaps around 2,000 of them used to take a loan in bank, according to our studies, of course. So our main challenge was to change the mindset of those entities. We have to get through the information to the organization. There are a lot of promotions of the loan schemes, especially during events directed to social economy. Moreover, what was the obstacle for the development of the scheme was the presence of grants for the same goal. Even from ESF, Therefore, with the next financial perspective, we had worked more intensively to organize better ESF support, so that the instruments do not cover. And we tried to offer or limit grants in those areas where loan schemes are supposed to be deployed. And the example is for self-employment.
Yes, so Barbara, I think, told everything, and I totally agree with Barbara. And it's not a secret that the financing system of the social economy is still based on grants, even if we are trying to increase the use of financial instruments. And in my opinion, to increase the use of loans, and Barbara said is we should establish a clear distinction between grant support and financial instrument support. And for sure, these forms should complement each other and not to compete. I mentioned it before, because the cases where grants and financial instruments compete are unfortunately the cases sometimes. And of course, Barbara also told us we should widely promote the benefits of repayable support.
Thank you very much. We are approaching to the end of the session, as timing is really running very fast. I would like to thank all our panelists, also participants. Before we leave, I would like to ask you to fill the final evaluation poll. Please, could we run the poll? And in the meantime, I invite you to all our other sessions and see you there. Thank you very much once again. Goodbye.
Thank you very much. Thank you.
Thank you.